afternoon, investors. You are now on KleverStock with me, Dini, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look at the domestic front, Malaysian equities opened on a flat note this morning as market participants search for fresh direction amid a lack of new local catalysts. The benchmark FBMKLCI moved up a slight 0.1 points to trade around 1,735.85 in subdued early action. According to Apex Securities, softer than expected US non-farm payrolls data helped alleviate immediate fears of aggressive Federal Reserve interest rate hikes. However, growing concerns over broader economic growth and unresolved geopolitical tensions in the Strait of Hormuz continue to cast an overhang across regional risk assets. From a technical standpoint, Apex Securities noted that the benchmark index remains within a downward sloping technical channel. Following last week's pullback, which formed a bearish dark cloud cover candlestick, the research house expects near-term consolidation. Immediate support is back at 1,735, with a secondary floor at 1,700, while resistance remains overhead between 1,760 and 1,770 points. Despite the flat benchmark index, semiconductor and technology-related counters saw active buying interest in early trade. Pentamaster surged 19 cents to 5 ringgit and 66 cents. Sam Engineering gained 10 cents to 4 ringgit and 35 cents. And Franken advanced 7 cents to 5 ringgit and 32 cents. Among actively traded stocks, DNEX picked up 1.5 cents to 48.5 cents. HHRG added 2 cents to 14 cents. And NationGate gained 5 cents to trade at 1 ringgit and 48 cents. Moving on to our local currency and foreign exchange. The Works Ministry is preparing its proposal ahead of Budget 2027 consultations scheduled for later this month, aiming for an increased development allocation to accelerate national infrastructure construction and maintenance. Speaking at an event in Batu Kawan, Deputy Works Minister Datuk Seri Dr. Ahmad Maslan noted that the ministry received approximately 10 billion ringgit in the previous national budget, with 9 billion ringgit dedicated directly to development expenditure. The ministry is currently synthesizing input across key agencies including the Malaysian Highway Authority, the Public Works Department, and the Construction Industry Development Board prior to meeting with Finance Minister Tu on August 28. In tandem with physical construction, the ministry is stepping up the rollout of smart highway technologies leveraging artificial intelligence, closed-circuit television monitoring, smart lanes, and specialized navigation tools. The Malaysian Highway Authority has developed the Tuju application, which serves as a highway-specific navigation system linked to the LLM Traffic Control Center. The application integrates real-time CCTV feeds, toll pricing, rest area information, and emergency services, and direct integration with the My Jalan complaint portal across Malaysia's 34 highways covering over 2,000 kilometers. On the implementation of multi-lane free flow or MLFF, the ministry confirmed that the initiative remains at the proof of concept stage. The deployment will be executed via business-to-business arrangement directly between highway concessionaires and technology partners without requiring public government funding. Highway operators are empowered to select internal subsidiaries or external service providers to deliver the technology, with early initiatives such as Plus Malaysia's Just Go platform already undergoing operational trials. Now for some economic news. We will now take a short break, but don't go away. We will return shortly with corporate news developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. European aerospace giant Airbus is expressing growing confidence in its supply chain recovery as the manufacturer works towards its full-year target of delivering approximately 870 commercial aircraft. Speaking in an exclusive interview, Airbus Asia Pacific President Anand Stanley noted that the plane maker is seeing tangible improvements across multiple supply chain segments. Close collaboration with industrial partners has helped reduce bottlenecks in aerostructures, engines, and cabin equipment, facilitating a steady ramp up in assembly rates. During the first half of 2026, Airbus delivered 351 commercial aircraft, up from 306 units delivered in the corresponding period last year. H1 deliveries included 271 A320 family narrow-body jets, 44 A220S, 26 A350 wide-bodies, and 10 A330S. CEO Guillermo Faury affirmed that the company's focus on operational execution is yielding positive momentum, supported by strong gross orders of 886 aircraft in the first 6 months. By the end of June, Airbus held a total commercial backlog of 9,222 aircraft. Demand across the Asia-Pacific region remains a cornerstone of Airbus' long-term expansion strategy. Anand Stanley revealed that Asia-Pacific orders accounted for over 50% of the 815 gross orders secured globally during the first 5 months of the year. To satisfy long-term regional demand, projected at 20,000 aircraft over the next 2 decades, Airbus is pushing ahead with production targets, including a monthly rate of 75 for the A320 family beyond 2027, 13 for the A220, and 12 for the flagship A350 program. Up next, we have a market update. Hong Leong Investment Bank Research has reiterated its buy recommendation on MISC Berhad with an unchanged target price of 9 ringgit and 4 cents, citing the maritime solution provider's expanded term contract coverage and ongoing fleet rejuvenation strategy as key drivers for long-term earnings resilience. HLIB analyst Tai Mei Ting highlighted following a recent site visit to Malaysia Marine and Heavy Engineering Pasir Gudang Yard that MISC increased its gas segment term contract portfolio to 98% in financial year 2025, up from 83% in financial year 2024. This high contract coverage provides a stable earnings base that effectively insulates the group from short-term spot charter rate fluctuations. MISC currently operates a gas fleet of 39 vessels, comprising 30 LNG carriers, 3 floating storage units, and 6 very large ethane carriers. Under its long-term growth roadmap, the group aims to expand its gas fleet to 50 vessels by 2030 through the addition of 14 new-built LNG carriers, 2 VLECs, 1 floating storage and regasification unit, and 2 liquefied carbon dioxide carriers, while phasing out older steam turbine units. In the petroleum shipping division, operating arm AET maintains a balanced 70-30 term to spot portfolio, enabling it to capture upside from periodic spikes in crude tanker freight rates. Additionally, heavy engineering arm MMHE holds a robust order book of 4.7 billion ringgit as of the first quarter of financial year 2026, providing clear earnings visibility through ongoing offshore substation platform fabrications and vessel conversion contracts. Today's major corporate developments and deals across Malaysia. We lead today's developments with a major milestone for IOI Properties Group Berhad. The developer has received formal approval from the Securities Commission Malaysia to establish and list IOI PG Malaysia Real Estate Investment Trust on Bursa Malaysia's main market. Backed by prime assets including IOI City Mall and flagship hotel properties valued at 7.58 billion ringgit, the REIT will launch with an initial fund size of 5.5 billion units. In real estate asset disposals, Malaysian Resources Corporation Berhad announced that its indirect subsidiary, Subang Central, is selling 14.8 hectares of land in Cyberjaya to Digital Cosmos Malaysia for 409. Apologies for the technical issues. We will continue with corporate news developments. New Energy Holdings accepted a 44.5 million ringgit letter of award from a Chinese engineering firm to deliver mechanical, electrical, and plumbing works for a consumer landing station building serving a data center in Johor. Rounding out the residential and property space, Exim Hospitality secured an 80-20 revenue sharing agreement covering 395 service apartment units at the Starlions at Ipoh White Times Square. Avalan celebrated the early topping out of its fully sold Amica Residences project in Subang Jaya ahead of its construction schedule. Finally, Sarawak Consolidated Industries Berhad entered a co-development agreement with Inland World to jointly build a high-rise residential project in Penampang, Sabah. That's a wrap for Midday Roundup with me, Dini, on KleverStock. Thank you for choosing us investors. Stay tuned for our upcoming live stream programs.